Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends its pullback and is closer to the 66.65 support as it just slips through this trend line after marking a more than 1 year high, as you can see here. And profit taking is clearly back into play as pressure from a sharply narrower November trade surplus as exports fell and imports edged higher. Adding to caution after a softer than expected CPI in Australia, which showed inflation had slightly cooled off, while the US dollar remains supported by relatively firm data ahead of Friday's US non-farm payrolls, keeping downside pressure on the Aussie for now. Forecasts expect around 66,000 jobs added, with the previous release at 64,000 jobs added. Meanwhile, the unemployment rate is expected to ease to 4.5 from 4.6. So turning to the technicals, we can see here after the bearish divergence kicked in, the market is a little bit to the negative side. Let's see how the support is at 66.65. If it's respected, could get a correction back to 68 cents. Turning to the euro, the market is still remaining somewhat negative and extremely oversold, and a trend coming through to the bear case. Keep an eye on the support area, seen around 116.10.15, as we could get a bounce, and if so, see a rally back to the correction of 117.45 to 118. Dollar yen, well, it's been stubborn once again as 4 bullish days come back into play and now capturing the 157 handle. I still feel like previous, a bull trap, and getting close to another. We'll see a turnaround and eventually expect the move down to the 155 area. Sterling also a little bit uncertain, but finding support ahead of itself around 133.80 to 134.10. And if so, could get a correction back to 135 or close to 136. Finishing off with commodities, still holding up relatively well. Now, myself and others are calling a 5,000 target this year, so keep an eye on that. But the interim target still remains around 4,500. Looking at the technicals, the market is a little bit mixed at the moment. May see a weaker play towards this trend line, but bargain hunters again likely to be seen, and see if this rally can correct back to the target of 4,500. Meanwhile, markets are still likely to remain cautious amid data risk, with softer job numbers in the US likely may revive the Fed to cut rates this year. We've expected of 2 or possibly 3 when Fed chairman is removed, and also safe haven demand with US and Venezuela, and also uncertainty with Iran as well could keep the market rallying longer. Wrapping up with oil, a good jump we saw overnight, and now looking back on target of $60 to $61 a barrel, with any pullback still likely to find a base close to this 55 area. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.